Good morning. I'm Pete Najarian. This is The Take on a Friday morning. And if you look back to yesterday, actually, you look at the Dow, it sure didn't do a whole heck of a lot yesterday. Closed up really, really small. But the big performer yesterday, of course, was the NASDAQ. And that was the outperformance that we'd seen there. That was up about 140 points, call it 1%. A lot of that driven by, of course, you've got technology. That was up pretty strong for the entire day. Apple and Salesforce and Microsoft and Twitter and PayPal and all the usual suspects leading that direction, as well as the semiconductors with Intel and a number of other names. That was up pretty strong for most of the session. Biotech as well, at chipping in a little something. So the combination of those three really did give a nice, big, solid move yesterday, again, for the NASDAQ. And volatility remains low. It should, because we're in a very, very compact, tighter range. And here we are trading right around that 17 level for the VIX. Did trade about 31.5 million contracts yesterday as well. So we are still seeing volumes that are in excess of that 30 million category, well underneath the 40 million category that we were in the early couple of months of the year. And we've sort of slowed down, and a lot of that probably having to do with the fact that we are seeing a little bit tighter and tighter market, seeing a lot of volatility come out of the markets as we're sitting here, as I say, somewhere in the teens. We had some nice high multiple movement yesterday as well. You look at the Pelotons and the DocuSigns and the Oktas and Cloudflare and CrowdStrike and all these various names, they were participating. What really did stand out as well yesterday was just the storyline, not talking about stock movement and everything else, but how about Rolls-Royce? They had news yesterday talking about record luxury car sales. That has to say something about the backdrop of where we are now and where we were literally just a year ago. The other thing is that I mentioned yesterday, we did see again more paper, the option paper that we are seeing, really starting to extend out, not just sitting there right there at the early April expiration cycles or April itself, but going out to May, going out to August, January, July, June. We even saw something yesterday going all the way out to January of 2023. So that's really stretching out for some of these leaps. Monster buyer yesterday, of course, in the VIX. We're going to be talking about that. I'll be hitting that on the halftime report today, which I'll be on in just an hour and a half or so. We'll definitely be talking about that volatility trade because that was a monster, and it's interesting and it makes a lot of sense. And you know, we were just talking before I came on here about volatility getting to these levels. Don't you feel like maybe there is something out there that could spike volatility? And I certainly, I'm in that camp as well, that why wouldn't that be a possibility? So why not start to prepare and get into a position like that? That's exactly what we're seeing. So as far as today goes, NASDAQ started off pretty weak, down about 85 points. It continued to stay weak throughout the session as we got to the opening, first half hour or so, but we really are starting to see a little bit of a turnaround there. I'm going to take a quick look. Down about 30 points right now in terms of the NASDAQ. So definitely well off of those lows of the morning. And then you look over at the Dow. Part of the leadership that got that into triple digits was the financials. Financials have faded back a little bit. That was the leadership early. JP Morgan and Schwab and some of those types of names. The industrials, however, those have been strong out of the gate. That was Honeywell and 3M, both moving nicely. Honeywell with a nice about 3% move, almost a 3% move to the upside. You had 3M with about a 1% move to the upside as well. So you get through that, but then you look over and you see technology under a little bit of pressure, and that's certainly along with semiconductors that were down 1%. They've recovered a little bit off of those lows for sure, cut that in half or so. So we are seeing a little bit more paper also coming and coming after some of those high multiple names. And we mention those names all the time, but certainly that's an area that we always like to keep an eye on just to see what the appetite is for volatility, or what would be perceived as more volatile side of the markets for sure. Volatility itself, it is still in the 17. So let's hit a little bit of unusual, and we're going to get out of here real quick for you. VIP shops, VIPS. This is a Chinese discount online retailer. Now, this is a name, it's fading a little bit from where they started. This is the third time we've seen this name hit earlier in the week. It's already hit twice today. So it's interesting to see the consistency of these buyers. So what were they buying today? The first one that stood out for me was a little bit less expensive. I try to find these types of things. It was the April 30th expiring calls, the 34.5 calls of VIPS. About 4,600 of those were bought. They were bought from anywhere from 45 cents up to about 60 cents. With the stock sort of heading south a little bit, those might have gotten a little bit cheaper at this point in time, but I'm just giving you the reference point for where they were buying them. The second unusual that I've got for you is one that stands out, and you hear me say this all the time. I really try to not talk about ETFs. I'd far rather be in the individual names. But when an ETF hits that you do not see very frequently, that becomes very unusual. So RSX, this is a Russian ETF. Yes, a Russian ETF. Trading right around just underneath 25 bucks. And we were seeing a buyer of 7,500 of the May 24 calls here, going for about $1.60. Now, the interesting thing is they are not only buying the calls, but we're also seeing the downside selling of puts. So this is somebody that's willing to own this underneath where we are right now, well underneath where we are right now. I believe they were selling the May 18 puts. So selling those puts as part of the financing of these calls. And if they're wrong, they're willing to be put the stock at a lower price, probably somewhere in the 17. So that stood out for me. And we do not see RSX hit all that frequently. So certainly is unusual. Folks, derivatives markets are the greatest. We love it. We talk about the volumes all the time and the strength that we are seeing in there. You got to have knowledge. Hopefully, if you don't have that, you're willing to go out and find that knowledge of understanding of all the different Greeks that we talk about all the time as well. If not, come to the Market Rebellion team. They can get you as educated. And we've obviously got our books and everything else. So this is not a pitch for any of that kind of thing. But you do want to have the knowledge in this particular part of the markets, because it is the part that continues to grow each and every week, each and every year. It's been an absolutely extraordinary run for the derivatives markets, and it continues as we get deeper into the year so far in 2021. Have a great day of trading. I'll see you on the halftime report in just a little over an hour, or a little under an hour and a half.